Hey everyone, Mike Clark here with Visionary Wealth Advisors, and now that the tax season's over, I thought it'd be a good idea to bring a CPA in to talk about the changes and just see how individuals can prepare for next year. So I have Brian Toennies with me. Brian's a CPA who has his main office in Sunset Hills. He's been in the industry for about 21 years on his own, has 14 employees, and really helps individuals and small businesses with tax planning and tax preparation. So thanks for coming, Brian. I appreciate it. Yeah. Are there a couple of things that financial advisors can do that frustrate not only the client but also the tax preparer?
Well, they always dress better and look nicer than me, so that's one thing, but I'll let that slide. We work with a lot of financial advisors, a lot of really good financial advisors. Sometimes we run across some that maybe aren't as informed. You don't have to be a tax expert, you just have to be aware of things that apply to your clients. So I get frustrated when I see an advisor who has an older client, maybe in their 80s, selling large holdings of an appreciated stock, and I understand the benefit of doing that. You want to diversify and protect them, but maybe sometimes that can be split up over a couple of years, so we're not taking a large tax hit all in one year.
For sure.
The other thing that comes into play with older investors is when they pass, their heirs get a step up in basis in that stock. So if you've got a stock you've held for a long time and it's appreciated, if the taxpayer sells it, they're going to pay a large capital gains tax. If they hold it on their death and their beneficiaries inherit it, they get a step up in basis equal to fair market value on date of death. So they can turn around and sell it and have little or no capital gain.
Yeah. So a basic example of that is Glenn worked at, we'll say, Ford his entire life. He has $1 million of Ford stock. His cost basis is $80,000. If Glenn were to sell that, he'd pay taxes on the difference, or the $920,000. But if his non-spousal beneficiaries were to sell it after Glenn died, that their taxation is on the value of the date of death. That's their cost basis, which is going to be somewhere around that $1 million range, we'll say. What are some things that advisors can do that help clients but also make your job a little bit easier?
We like it when the advisor keeps their clients informed, especially interest, dividend income is typically pretty consistent year after year, but the capital gains can vary widely. So we like it when the advisor kind of keeps their client informed of, hey, it looks like your capital gains are going to be a little higher this year. We've got some gains we needed to take. There's additional capital gain distribution in these funds this year. So when the advisor tells the client can come to us and we can prepare them, say, well, great, you made more money. Looks like your additional tax liability might be $3,000 or $4,000 more. Just be prepared for it. Because nobody likes to hear me say, hey, good news, you made more money and you owe $10,000.
Yeah.
It's good news, but they like to hear it earlier.
Well, yeah, I mean, no one likes surprises unless it's for good things, right?
Yeah.
And I think it wouldn't take much for an advisor to reach out to a client to let them know what their taxes are relative to last year so that they can prepare. And also maybe even provide a comparative analysis, for lack of better terms, of what their taxes were last year versus this year so that they know what the differences are. And I know one thing that we saw last year is that 2017 was really the first year in a long time that a lot of mutual funds paid cap gain distributions. Back in 2007, that was the last time I remember funds really paying a lot of capital gain distributions. A lot of the fund managers did a good job of harvesting losses in 2008 and 2009, and effectively those losses were on the shelf throughout 2009 through 2016 to offset gains. But once 2017 came, there's nothing on the shelf. There's no losses to offset. So we did see a lot of funds begin to pay capital gain distributions. So that was a surprise for a lot of people, for sure.
Yeah,
for sure. One thing I wanted to say is that Brian and myself do not know you, the individual watching this. So anything that's said today should not be considered advice, either from Brian or myself. We don't know the ins and outs of your situation. So we hope you enjoyed this video and have a great day.